Hey guys, it's Andrew from HYDRA. First things first, hey, if you guys get value out of this, go ahead and give me a like and give me a subscribe. Today we're going to be talking about diagonal zone and trend, so grab a sheet of paper and an ink pen and get ready. Okay guys, so welcome to diagonal zones and trends. Guys, when I first started trading, one of the things that really helped me was being able to trend diagonally where the market was going. It showed me if it was in a bull or a bear. It also gave me some indicators on when to get out and when to get in. So I kind of want to go over some of that with you guys. There's some of you obviously that are going to be newer than others. There's some of you that have seen this. This is also called swing trading, or there's a couple different names for it, but this is just what I use. So I want to make a quick video. I just got off a call with some of my teammates, some of the people that we do train and teach, and they wanted me to make a video about diagonal zones and trends. So here we go. So just jumped into a chart. This is Euro NZD, EN, and this is one of my favorite ones for trending. And the reason why it's my favorite is because EN tends to run on long trades, right? When it gets into an uptrend, it tends to keep going up. When it gets into a downtrend, it keeps going down. A lot of the time, there are, obviously, sometimes it wants to do its own thing. It depends on a lot of different things. But this one trends basically the best that is comfortable for me. But everybody has to find a pair that fits their eye. So let me get into this real quick. So this is a 15-minute chart. Now, some people trade on, the 1 hour chart. Some people trade on the 15 minutes. Some trade on 4 hour, the 1 day. I mean, whatever. This will work on just about everything. I don't normally trade in the under 15-minute range. Getting into the scalping deal and all that stuff, that's not my trading personality. I know a lot of people on my team that make a lot of money doing it, but this is personally my favorite. And I still use this to this day. I've been trading now for several years, and I still use this to this day. So we're going to go back to like December. I found this on the chart. I found this little trend here on the chart. We're going to go back to like December, I don't know, December 1st, right? So what I'm looking for, guys, for a trend to start, all right, I want to find basically the lowest point, and you'll see right here, you'll see that we have a wick, and then obviously it trends up. So if you want to teach yourself how to do this, just rewind back a little bit into your charts, and I use this tool right here. This tool right here is basically, you can pull that up. If you hit that little arrow, it'll pull up, and it's called a trend line. And that's what I want to use, right? So I just use my trend line. I'll kind of find when I'm practicing this, when I'm doing it, and just tracing these out in real life, I'll kind of find down here where it's the lowest point, okay? And then I just bring that point up. Now, guys, what I'm looking for as I bring this up, okay, and then just click it again, and it gives you your line, right? What I'm looking for on these trend lines is I'm looking for as many touches as I can get, all right, usually within 5 pips or so. And you can see all these touches. We have a couple here. We have our beginning one, obviously. We have several through here. We have one up here. Now you can see this is over several day period, right? This runs all the way up to a 4. This would have been like a 4-day trade. But here's the deal with it. The reason why I'm doing this, the reason why I want to get so many touches is because with every touch and every bounce off of my trend line, it lets me know that this is a valid point of resistance for this uptrend, right? It's riding this rail, if you will. See, it's riding the train rail right here, okay? And if you want to trend it on the other side, if you'll click the trend line and you'll come up here and you'll hit clone, it'll make one exactly like the last one, and you can just bring it up here, and you can make your other trend line if you want to right there. Here's the thing about an uptrend and a downtrend. Normally I will not make this line. I will not make this trend line. The reason is because I don't really care what happens up here. Okay. The only thing I care about is when it breaks this trend line. Okay, and as you can see, this trend ran a long way. I would make this trend line when I got to this confirmation point right here. Here's our lowest point. We saw the market coming up. We saw it come down and bounce right here. Okay, at that point, I would have made my trend line here, and I could have just drew it all the way up here. None of this would have happened, but it just followed, and every time it hits off this, it basically lets me know that that was the correct place for me to put that trend line, right? So you have to make a decision when you're building these out, when you're making your trend lines. You have to make, I mean, you have to have some rules when you trade, right? You have to have your ground rules. You have to have a trading plan. I tell myself back here, okay, when that starts running there and it bounced off and it got up here, I start putting my trend line in, and I would just ran this trend line up there or past here, and I'm going to tell myself, I'm going to say, okay, when this breaks this trend line, okay, I'm out. I'm out of the trade. Okay, and the reason why you have to do that, because you can't say, well, I think it's just going to keep going up, it's going to go up. Look, get your pips and get out of the market. Okay, on this particular trade, and I trade EN every week. On this particular trade, I would have got in at the close of this candle, and I would have taken that trade till it broke down right here. Okay, so guys, it was 5 days that I had this particular pair open, and it was 208.3 pips when I would have got out of the market. Okay, because this didn't tell me to get out of the market before then. Okay, nothing in here told me, hey, get out. What this does is, when I first started trading, so I'll tell you a story. When I first started trading, I would make, you know, $5-10, and I would run for the hills. I made my money, I'm getting out, I'm going. And then I would look back the next day, and you know, it would be up another 150 pips, and I would get frustrated. Yeah, it's good, you can never go broke making a profit, but why get out when you could ride these trends all the way through here? So I hope you guys kind of understand how this trend line works, right? Now, what I'm looking for to get out, and if you guys have questions about this, or comments or whatever, please leave them. Leave them in the comment section. Like this video, please follow the page. I'm going to be making a whole lot of these, and I try to make it as simple as I can, because I'll just be honest with you, like, I wasn't the smartest guy in the world when I started this deal, but I mean, you can teach your 10-year-old neighbor's daughter to do this. This is nothing against neighbors' daughters, but you can teach them how to do this, because all they got to do is follow a line, right? So here's what I'm looking for on the next one. Okay, so we broke here. So, well, Andrew, when do I get out of this deal? Okay, my rule is, okay, what I'm looking for is I'm looking for a retest of the bottom trend line. Okay, so we broke here. We retested this trend line. Now, you have one of two options at this point. When you start learning a little bit of market structure and things of that nature, you'll know when to get back in. But when I first started, I really didn't, I didn't know a whole lot about market structure. I knew a little bit about it. So this was always iffy. Hey, when do I get back into this deal? Okay. Well, when I first started, I would have gotten in right here. Okay. And it's not terrible, because it broke, right, and it came back and it rejected off that line. You can see that red, let me try to get in there. You can see the red wick, right? And then it came back off of it. But if you would have got in there, you would have had, 43 pips of drawdown on that. Okay, so if your stop loss was at 40, it would have kicked you out. Even if it kicked you out, you made 200 and whatever we said, 280 pips on the come up. So it's not the worst thing. But what I'm really looking for is I'm looking for a retest of this line to get back in. Okay, because when this goes out of here and it retests here, and you have such a strong rejection, that's a beautiful thing. What that lets you do is it lets you either set another trend line, right? So if we set a trend line on this next one, let's say we just set another trend line on this mark when it come back and kicked off. Okay, you have a trend line here. Okay, so none of this exists yet, but if I'm drawing out this trend line, okay, this is not a huge pip maker, but you can see when I zoom out a little bit on this, that this is still in a downtrend, okay? It is still in a downtrend. I would not have got out of this trade until here. Why? Like we said earlier, I'm not worried about anything until it breaks and retests this line. Okay, not worried about anything. This can all stay here. It's all good. As a matter of fact, it would have been a great time to take profit right here. One of the things I had to learn real early in my trading life was, set a target for your profit. When you hit that target, I always moved my stop loss into profit and let the trade just do what it's going to do. Okay, so always use stop loss, always use risk management. Let me say that again. Always use risk management. Sometimes trades aren't going to go your way, but this was just a way for me to set it and forget it because I had to go to work, right? That was my deal. I could get into a trade in the morning, and I couldn't sit here and watch it all day. That's one of the reasons why we started HYDRA, is because it sent the signals out to you. So I could be at work and still get the signals. That's on our website. The link will be in the description to our website. We send signals out on every single pair. Buy and sell signals. Obviously, do your own due diligence on those, but they're pretty accurate, guys. So that's what I do on a 15-minute chart. Okay, that's how I build out my trend lines on a 15-minute chart. All right, now this will work on an hour. Now I will be 100% transparent. I only trade on an hour chart. Okay, I've just always have. It's been my thing. I always trade on an hour chart. It's more comfortable to my eye. I think it tends to ride your trend lines better. But I mean, do what you need to do. But I trade on the hour. So we'll do this one real quick. So we had a rejection here. You can kind of see this rejection here. If you trend line this out, once you look at this, okay, bang. Now look, what I'm looking for again is I'm looking for as many touches as I can get. Okay, I have a bunch of touches through here. It broke right here. Okay, I'm out of the trade. All right, if I wanted to get back in, I could, but this retest right here is a perfect time. Look at this. You have this really, really, really hard bear candle followed by a engulfing bull. Guys, 101. That's a nice change. You want to be back in the market at that point, especially on this pair. Yeah, now you can see on the hour chart, which is what I trade on, and I've basically traded on all of these. This broke and it retested here. You see how it came up, came back down, retested. It made a lower high than this high. Okay, so we've broken the trend. Now we're in a downtrend. So I get in here and I ride it all the way down. Okay, it broke right here. That's 243 pips. Okay, took 10 days. This is not the only pair that I trade, but it took 10 days to do that. But I don't worry about this until it breaks. Okay, then on the other side of it, obviously, look, it came down, retest, boom, come back up, get into the trade, you can ride it all the way back up, right? Okay, I'm looking for as many touches as I can get. Okay, so I have a touch here, I have a touch here, 2 touches here, a touch here. I'm not worried about this until this candle. Okay, when this candle broke it and it closed right here, I know to get out of the trade, right? But at that point, guys, so in the first 10 days, I made like 280 pips or whatever it was. Okay, on this trade, I made another 187 pips in 6 days. So, or 98 pips, or 187 pips in 6 days. Okay, so I'm right around, I don't know, 500 pips in 16 days. Okay, see where this is going? Okay, this broke, didn't quite retest, but it made a lower high than this one did. Okay, so if you wanted to trend this out, you could. Okay, if you wanted to trend it out, you could. All right, now where would you get in on this one, right? So it broke, okay, came back up, made a nice wick here. At that point, you're making lower highs, so you know that you can go all the way back here and you can trend this out, right? And just draw this, you know, to wherever you want to draw it to. You can get into the trade at that point if you want to, okay? You don't worry about getting out of that trade until it breaks this trend line. You see this really nice strong push right here, okay? That broke the trend line. That candle closed above, okay? But we got in right here. So we collected another 44 pips in 6 days, okay? And this just keeps going. This closed, obviously, today is the 18th of December. So this is where this closed. So I'll be watching this. We kind of went into consolidation right here a little bit. So I'm going to see what it gives me. But guys, you can go back as far. I mean, look at this thing. This is ridiculous. Look at this thing. Lord have mercy. What's the problem, guys? Just get into the trade. Look at this nice top right here. This, oh man, yeah. Turtle soup all day. Turtle soup M all day. Anyway, so you can trend that out. That trend would have been real steep. Guys, use a little common sense. If your trend's super steep, you know, you may not want to trend it that way, even though you could have trended this and made a whole bunch of money on it. I mean, if it came here and it retested here, that's a lower high than that one. You can start throwing a trend line. It gave you another chance right here, and you still could have took all this and not got out till here. Okay? And then when it broke here, okay, came up here, it made another lower high, so it wasn't done yet. Okay, it was not done yet. You could have taken all that one. Okay, so there are trends within trends. Okay, it broke here. Okay, came up. That one made a higher high, so you might have wanted to trend that one up to see where it went, to see if it hit again, and when you felt comfortable, get in it. But here's the thing. We started getting lower highs now, okay? All right? You're not going to hit all of these trades. You're going to get in early, and it's going to turn around on you and whatever, right? Nothing is perfect. But I'm telling you, these trend lines are deadly. If you want to be in for a while and follow these trend lines, I'm talking about I make thousands of pips a week doing this. So, you know, obviously trade at your own risk. Use your own judgment. Use your own indicators. But guys, if you got any value out of this, go ahead and click like. Leave me a comment about what you want to hear about next. We have, you know, 7-figure master traders that are on staff here, and we look forward to helping you. And make sure you give me a like and spread the word for me. Share it around some for me. And guys, have a great one, and we will definitely see you next time. Remember, scared money don't make money. See you.